Good morning, this is Andrew from Trend Following Mentor, and as I do every Sunday, it's just a market review. It's a review of my positions, it's a review of potential positions, and where we are in the stock market. And the reason I do this way you can kind of start to learn on how I actually think about the stock market. Firstly, you always look at the market first. And we had a very strong market actually with a little bit of a pullback last week. And then we've actually we've digested these gains, which is really constructive. And the Russell is up 2.4%. Why is that interesting? Because the Russell is more speculative, it's more of the smaller caps. It's showing strength, it's showing that institutions are taking on risk. And what's really interesting with this rally that we're having, and it caught a lot of people in the wrong situation here back from August, where people ended up losing on their longs and then trying to go short. Many hedge funds really got walloped. So you really have to follow what the market is telling you to do. And this is really what's interesting. It reminds me almost of like 1998, late 1998, where the market was a hated market. We had these big runs up and then it just took off the last quarter. And potentially we're doing that again. Again, what we do at Trend Following Mentor is we combine a combination of fundamental and technical. What does it mean, fundamental? We look for the strongest stocks in the strongest sectors. And what does it really mean, strongest? Strongest means they're making money. And I'll give you an example. Let's say if you go to, let's just do this, one second. Let's just go to investors.com. And you look at the earnings of some of these companies. And you just use a lot of common sense. A lot of it is almost like the idea of Peter, what's his name? Peter Lynch. One second, let me just log in here, and I'll show you exactly what I mean. And let's use an example of a stock that I'm interested in, that's on my watch list. And it's Palo Alto. And Palo Alto is in the field of cybersecurity. They're one of the strongest. And you want to understand what they're doing. So you look at this. Wow. That means that Palo Alto is 97 out of the top stocks. It's 97% better than all other stocks. Industry growth is a little high. We want to buy them when they're in the 40s or below. But all these others, last quarter's earnings, 133%, 132%, 105% quarter earnings. These are all positives. This is a little bit of a negative. You want to see about 17% here. But overall, this is what I mean where you're combining the fundamental. This company is making a lot of money. And you read about it. Then you combine that with the market. Right now you can see, right now I'm on a buy. I'm above all these key moving averages. We're looking strong. And you can also see how everything is color-coded and we're green. Green means we're positive. And if you have met a stock, I'll gladly send you this indicator. It's not magic. There is no magic with any of this. But now let's do this. A handful of stocks that are on my watch list and some of the ones that I own. I own Facebook. I own Lithium Motors. Why? Because they're also making a lot of money. Amazon, I'm not in, unfortunately, because you know what? It becomes a little bit of art and science a little bit. Whereas, here we go. Let's just use these examples. Palo Alto, and you can see where I'm looking to buy this. I'm ready to buy this. It's taken out the prior lows here. It's a new setup. When we can take out around this breakout here, which we're knocking on the door, I'm going to try to scale in. What else do I like? I like seeing this gap up, except for that day. Here, let's just make it a little bit bigger. Yeah, and we're going. If I can take this price out of 189, let's say 82, I'm buying, and I'll buy 50% of my position at that point. And they go a little bit higher. Let's say another 3%. I'm buying another 30% of my position. I go a little bit higher. I buy the remainder of my position. And what's interesting is I'll scale in. If I can take out the all-time highs of 200 and like 0.65, 10 cents above, I'm buying even more. Full disclosure, I do not own Palo Alto at this point. What you want to do is you want to have a watch list. This is an example of my watch list. Extremely profitable company, extremely pertinent in the news with all the cyber break-ins, and see what happens. Look at the market, look at the fundamentals, look at the technicals, look for a breakout. What I also said is, I'm not perfect. I missed Amazon. Here it is. Because I thought maybe Amazon is a little bit too big. I only try to put on 5 positions. I allocate my account. Also, we're potentially at the end of one of the longest bull markets. I'm not trading a full, like at the beginning of a bull market. The beginning of a bull market is when you want to be the most aggressive. And the way you know it's the beginning of a bull market is you've had some steep sell-offs, minimum 20% or more, minimum 6 months or more of some severe downtrends, and start going above the 200-day moving average. That's when you want to be aggressive. And it's also, again, it's a personal issue, is I like looking at the smaller caps because they have more energy. I mean, Amazon, Facebook, Alphabet, those are the ones that are moving, but the issue with them is they have a lot of shares, a lot of baggage. But you can see the breakout here. Volume, gap up, and you would have been a buyer here. Okay, that's an example. Facebook, I'm in Facebook, and you actually had 2 entries in Facebook. I got in at the entrant here, very similar to what I showed you in Palo Alto. Had a cup, got a lot of weak hands got taken out here, a lot of volume here, and bought here, and then we went to new highs. Didn't overly work out. I got in here, almost got taken out, and it's struggling a little bit. We'll see what happens. And you have to have a plan with where to get out. Lithium Motors, I'm in this one. You can see a nice big uptrend, solid, very, very, very profitable. Actually, what happened here was I bought my buy 1, I bought my buy 2, and then got taken out on it. I was below the 50, it fell more than 7%, but I bought it back. This is what trading is. It's not being right, it's following exact rules. My rule is if I get taken out on my secondary positions or my add-on positions and it starts going back to them, I buy them plus 10%. Let's see what else we have for the weekend review here. Palo Alto, Amazon. Again, I'm looking at other issues. I'm looking at Monster Beverage, but my boat is pretty full with positions, and they're not all overly working. Again, you're going to have, at the beginning of a bull market is where you make your most amount of money. What I do, just show you real quick, I have the book, The Bible of Trend Following. I teach you how to trend follow, buy breakouts, how to identify the strongest stocks or the strongest markets, The Bible of Compounding Money, one-on-one mentoring, have a course. I can be reached at andrew@trendfollowingmentor.com, and just let me know how I can help you. Thank you very much.